All right, so thank you for joining us tonight, everyone. So the topic tonight, this is a series of seminars that we're doing every Thursday night. It's thinking about moving. So different subjects or topics related to thinking about moving. Tonight's topic is deciding when is the right time to buy a home. And for the benefit of those people who might watch this later, I am Kristen Mason Coreas, owner of the Homes by Mason team and the lead realtor. And I have been doing this now for 10 years. And I specialize in Northern Virginia predominantly. I am thinking about getting my license in DC during quarantine. That's been something I've been thinking of. I've actually been thinking about it for a long time. I have a little more time now to get the license in DC. All I have to do is take a class and a test. So that may very well happen soon. So, and I am a top producing agent in my office and in the region, and nationally I am top 1% nationwide. So in terms of deciding when is the best time to move, oftentimes there's a life event, right, impacting when you want to move. So Jill and Ted, for example, right, they were getting married and that's why they bought their new home. And so that's something that might be motivating people. A pregnancy, having, one or more children, oftentimes people are outgrowing their space. When kids are starting school or transitioning to a different school, that often motivates people. A job change, parents in need of care. These are probably not news to you, right? So if you are thinking about buying, you might be experiencing one of these things. And so basically what I just want to say there is that, of course, it's ideal if you can plan ahead to reduce stress, right? So when you're planning a wedding, when you have a baby on the way, ideally, or starting a new job, right? All of these life events are stressful, right? Stress inducing usually. And so buying a new home also can be stressful. Of course, when you work with Homes by Mason, we make it as simple and low stress as possible. That is our goal, and we're pretty good at it. But the reality is it's a big transaction and it can cause stress. So I would advise ideally trying to stagger these events, right? So try not to be doing them at the same time. That said, there is no perfect time, right? When I was having kids, for example, if I waited until the right time to have kids, I would never have had kids, right? And I'm sure a lot of people can identify with that. So same thing with buying a home. There's not really ever going to be the perfect or the right time to buy a home. So, but again, to reduce stress, I would advise staggering these events. Now, in regards to end of a lease, what a lot of people don't know that's important to realize is when you transition from renting to owning, as this slide says, you skip a month's payment. The way that works is when you're paying rent, you pay on the first of the month for the month coming. That's how you pay rent. When you're paying a mortgage, you're actually paying for the month that just passed. You're paying the interest that has accumulated on the loan for that past month. So when you buy a home, for example, today is the end of May, right? So let's use actually middle of May as an example. If it was May 15th and you bought a home today, you would pay for May's interest at the closing table, and then you don't pay for June's interest until July 1. So you don't have a payment in June. If you bought a home May 15th, your first mortgage payment will be July 1. Okay, a lot of people don't realize that, and it's important to know that people don't want to double pay, obviously, right? And so we don't want you to double pay either. And so that is something to kind of plan around as well when you're going from renting to owning. So here's James. So the start of the process does ideally start with getting pre-qualified. So talking to a lender to get pre-qualified, and that's ideally because there may be some surprises, and also you're going to get a lot of great information in order to set you up for success in your search. So with that said, these are kind of the key points that James is going to talk about, and I will hand it over to him.
Thank you. Thank you very much. Yes, I mean, getting pre-qualified is really the best thing to do to get started. And people always say, well, when should I get pre-qualified? And I always say the sooner the better, because the sooner we can look at everything and, go through your credit, go through your income, the better we can plan. So even if you're not looking to buy for 6 months or 12 months or 18 months out, the sooner we can take a look at everything, we can set those expectations up front. So the way the loan applications are done today is they're very easy. They're done online through our secure website. And half the time, we can pull all your income information and all your banking information directly from the application. So you can literally get fully approved and ready to write an offer on a house without even, digging up W-2s, looking for your bank statements. Because of the automation that exists in today's world, we can get all that information just through the loan application. So they've really made it easy from a perspective of buyer. In the old days, you had to gather all this information, fax it in. Now, in just a few moments, the time it takes to fill out the application, we can automate all that information, have everything in front of us, and can give you real-time information to make a decision basically instantly. So the most important things with getting a loan application up front is one of the things we do right off the bat is we identify any special programs you may qualify for. So you might be a first-time home buyer. You might be a subsequent use home buyer, but there may be special programs out there that you weren't even aware of that you can take advantage of. So a lot of times our first-time home buyers, in Virginia, we use a program called the VHDA, or the Virginia Housing Development Authority, and we can actually get you a grant, a 2% grant as a down payment. Or we can do, potentially 100% financing, or we can get you reduced interest rates because you may qualify for a Fannie Mae or Freddie Mac income restricted program. So getting that application up front, the very first thing we're going to do is survey what is available for you. The next thing we can do is we can get you accurate real-time information. So everything is based on the quality of the application. So a lot of times you may see something here or there, but you may not fit that parameter, and you may be actually looking at much different terms than maybe you thought you were going to be looking at. So getting an application enables us to get real-time, real accurate quotes so you know exactly what your costs are going to look like. And one of the other things that almost happens more than you can imagine is by getting that application early on, we find there might be a credit issue you have no idea about. You may have gone to a dentist and they sent you a bill, you had no idea, you never saw the bill, but that dentist has now put it into collection, and now that's going to hit against your credit. And here we are ready to buy a house, and now we don't have time to get that blemish fixed. Whereas if we had caught that early on in the game, if you had come to us a few months in advance, we could have hashed that all out and got that fixed and ensured to get you the best possible terms when you're ready to buy. I think we're good on that page. If you guys can.
I will move it forward. Oh, did you talk about blemishes? Sorry, I was distracted. You did
that's okay. Yeah, I just said the earlier we can get start on those blemishes, the more lead time we have, the easier it is for us to get it fixed and get it removed off your credit report. So I have a gentleman right now, they had no idea, perfect credit, never missed a payment. That's why I use that dentist example, because it was a dentist that sent a bill to the wrong address, and they're buying $1 million home, and the wife's credit scores dropped below 700, and now we have an issue. So
right. And so the one thing I was going to add to that,
never missed a payment in their life, so
right.
An early start on that stuff really helps out.
Right. So, when we were buying, Edwin had like a $20 debt on Target credit card. It was like he never realized that it was there, and so that had affected his credit score. So again, there are sometimes surprises there.
This was a $100 bill, and people would make $30,000 a month. So they obviously would have paid it if they knew it was there. So yeah, that moves us into the importance of credit score. So that blemish is talking about credit blemishes, that's a perfect leeway into credit score. Credit scoring is probably the #1 factor that's going to determine what kind of terms you get on a loan. And in today's world, I would say just, through the COVID and some of the credit issues that have happened through the stock market over the last couple of months, credit scores tightened up a little bit. They kind of want they have some stricter guidelines out there for loans right now. And the interest rates are phenomenal, but every 20 points on your credit score has an effect on the terms you'll get. So normally on a conventional loan, we're at about a 740 credit score as the high credit score. So every 20 points below, so if you're 720 or 700 or 680, you're going to see a pretty steep rise in your interest rate and annual percentage rate. So as the credit score goes down, the rate goes up. So it's another great reason to get the application in early, because then we can address things. We might have some easy stuff we can fix so that 2 or 3 months down the line when you're ready to buy, we have everything fixed and we have your credit score as high as possible to ensure you'll get the best available terms at the time. So not only does credit score affect the rate you'll get, but if you're not putting down 20% and you have to deal with what's called mortgage insurance, it will also affect the rate of the mortgage insurance. So it's almost a double whammy, because if your credit score is less than perfect, you're going to pay a higher interest rate, and then you're going to pay a higher mortgage insurance. So you're getting hit 2 times. So once again, the earlier we can get in and get the credit scores and blemishes fixed, the better overall loan package and lower APR, annual percentage rate, you're going to receive. So one of the big misconceptions is down payments and how much down payment people need. A lot of people still come to me and go, oh, we need 20%. We don't have 20%. Well, the good news is on conventional loans up to $510,400, if you're a first-time buyer or you're under some income limits, you only need a 3% down payment. So basically up to a $525,000 sales price, you only need a 3% down payment, okay? If you go in our area, which is basically Arlington, Alexandria, Fairfax, Loudoun, Prince William, Stafford, DC, Montgomery, PG, the loan limits go much higher. So we can do a conventional loan all the way up to 765, 600, but loans above 510, 400 and less than 765, 600 require a 5% down payment. So conventional is the best way to go typically if you have strong credit profile. But if you have less than stellar credit, or you're not able to come up with a full 5%, you can do an FHA loan, a Federal Housing Agency loan, all the way up to 765, 600 with just a 3.5% down payment, okay? We then, in Virginia, we have the Virginia Housing Development Authority, which I alluded to earlier, and they have options with 0% down. They actually even have an option where you can finance some of the closing costs. They have an option where you can get a grant, and those are income restricted based on not only being a first-time home buyer, but then there's some restrictions on how many people live in the household, and that's how they kind of calculate out what you qualify for. But the numbers are very high in our area, surprisingly high. If you're a veteran, you can do a VA loan, 100% up to $1.5 million right now, as long as you don't have another outstanding VA loan. And then one of the other things we deal with all the time is all the programs out there allow gifts. So if maybe you have 5% of your own and mom and dad or Uncle Jerry or cousin Larry or whoever it is wants to help you get in the house, they can actually give you a gift to help put a larger down payment, and that's acceptable. And then finally, regarding mortgage insurance is required when you don't put down a full 20%. So some of the things we can do with mortgage insurance is, one thing is called lender paid mortgage insurance. So you can take a slightly higher interest rate and you eliminate the mortgage insurance payment altogether. One of the ways we can do mortgage insurance is you can pay it monthly and then it falls off eventually. And then one of the other ways we can do it is called a single premium, which is a one-time payment of a mortgage insurance. And that just eliminates it so you don't have mortgage insurance for the life of the loan. And I think, do you have any more?
Yeah.
More for me?
No, that was it for you.
Okay.
So I'll stop it there. And if people have questions for James about that stuff, I think now's a good time to ask those questions.
Well, Ted had a question that does pre-qualification impact your credit score? In other words, does it count as an inquiry?
That's actually a great question. It does count as an inquiry, but it does very little to your credit score. So most of the time, a credit inquiry for a mortgage only will result in a few points coming off your credit score. And then once it's pulled, if you want to shop with other lenders, you have a 45-day window in which multiple inquiries that are pulled for credit scores for a mortgage only count as one inquiry. So the long story short is, does it affect you? Yes, very slightly. But you do have the opportunity to have several other people pull it, or several other banking institutions or financial institutions pull it, and it only counts as one inquiry. So it will have a very little impact on your overall credit score.
James, another question that I got, sorry, in the chat, it came to me privately, was how long the pre-qualification lasts. It's usually 90 days, right?
Well, here's the situation. So it goes 100, once we pull a credit report through a pre-qualification, the credit report's good for 120 days. So normally we'd have to get you under contract in 90 days, right, to close you within 120. So outside of that window, it's not a big deal. We just would have to pull a new credit report, and as long as everything is in the similar state, there shouldn't be any material changes. So as long as no payments were missed or anything like that, we just pull a new credit report, and then we have 120 more days from then to close the loan, and that's how that works.
Okay. Gary asked, what are the best rates for a 30-year fixed rate loan?
I mean, it depends on how many discount points you want to pay, but I mean, they're approaching, there's rates as low as 3%, possibly lower depending on the down payment you're putting on. I mean, a VA loan today, a veteran loan today is 2 3/4 for a 30-year fix. So, yeah, the rates are literally historic lows. They hit the lowest point ever. I mean, Freddie Mac just announced they hit the lowest point ever. Now, Freddie Mac's a week behind in how they report, but it's still amazing. The interest rates are absolutely amazing.
So that actually is a great segue into the next part of the conversation, which I'll pick up on, and James, of course, may have some input here as well. So the impact of interest rates on your purchasing power is huge. So this chart shows you that a 1% change in interest rates can cut your purchasing power by 11% because you are simply paying more interest, right? Your monthly payment gets higher because you have to pay more interest. And so the amount of house you then qualify for is less, right? You qualify for the same monthly payment regardless, but if you're paying more of that to an interest rate than you are paying for the cost of the house, you now can afford less house when the interest rates change. So another slide that I have, this one, if you are more of a numbers person, which I am, this walks you through it with numbers. So from scenario 1 to scenario 3 makes the most sense. What happened here is the price of the home changed $25,000, and this down payment stayed the same across the board, but the interest rate changed by 1% here. These numbers are kind of funky numbers, ignore that, but it was a 1% change in interest rate, and this here is your monthly payment. So your monthly payment here is significantly higher. Well, it's by about $400, right? And then over 30 years of that loan, you're paying $146,000 more for that increase of 1% in an interest rate. Now, when you look at scenario 2, this surprises most people, including myself, the first time that I looked at it. The price of the home went down here by $25,000, but the interest rate went up by 1%, and the monthly payment is still higher. So even though you thought you were getting this house for less, because it's $25,000 less on asking price, you are in fact paying more every month for this home because of that interest rate number. So this is $154 more a month over the course of the loan, $55,000 more.
Wow.
So,
Kristen,
mhm.
on that note, Gary asked if they would put down 20% and have excellent credit score, what would be the rate for a 30-year fixed? 20% is a lot. So, and with a excellent credit score, James, would you be able to touch on that?
Yeah, I mean, it would be close to 3%. I mean, I just quoted one.
Below 3% or like right at 3%?
So
I mean,
he's not going to be able to answer that. I mean, again, it's going
It
to
changes, yeah.
Yeah, I mean, it would be, I would say use 3% as a rule of thumb for right now.
Okay.
I mean, you could get to a lower rate, but it's going to have additional costs. But I think 3% is a fair number.
Okay.
Okay, so then here's one more slide that shows you the impact of interest rate on your monthly payment, right? So this is older, right? It's from 2018, but what it shows you is, again, what your monthly principal and interest payment is as interest rates change, right? So week by week, interest rates as we, change day by day, week by week. And so here, during this period in time, you could pay a mortgage payment of $2,312 on the low end, and on the high end, $2,641, right? In the same time period, but depending upon what interest rates were. Okay, right? So it does affect your monthly payment, and of course, over the course of the loan, you're going to pay more because of that interest rate. So that is one of the most important numbers to be paying attention to when you are thinking about buying a home. Some people say to me that they want to save more money for a down payment, right? They don't have the down payment, they want to save more. However, what they don't realize, right, is if they wait a year and interest rates rise 1% in that year time frame, well, now you've essentially washed out the benefit you may have gained by saving more, because you're paying more every month and you're paying more over the course of the loan because that interest rate went up. So, James, anything else you want to add?
No, I think that's perfect. I mean, I always look at it and say, if the payment's affordable and the rates are at historical lows, I mean, you can always get rid of the mortgage insurance and stuff like that down the line, or you can, like I said, what we talked about earlier, taking a slightly higher interest rate and get rid of the mortgage insurance. I think the cost of waiting outweighs the benefit of the historic low interest rates that we have right now.
Awesome. Thank you.
You're welcome.
Okay. So then how long does the process take? So a quick overview. This is a little bit of a roadmap, right, of the process. So ideally, you start with a buyer consultation, which is kind of what you're doing right now, right? So you're here talking with me, an experienced realtor, about the process. We often do this one-on-one as well with people. So that's usually the best place to start, because an experienced realtor can also then put you in contact with a trusted lender to get you a good loan pre-qualification, because working with a good, experienced, trusted lender also can make a big difference as well for many reasons in the process. And then you've got the search process, which is going to be different for everyone. So I've got a big blank space in here. I'm going to talk a little bit about the search process next, because again, it's going to be dependent upon different people's experiences. However, once you make an offer and have a ratified contract, in general, the time to get from that ratified contract to your closing, where you get your keys, is generally 30 to 45 days in our market. So I can't speak to other states and other places what their time frame is. We have a pretty quick moving market, and oftentimes if you are in a competitive situation, we might even close quicker than that, which James has done for us many times. And that's a whole nother conversation that I'm going to do in 2 weeks. I will do a seminar actually on how to search and secure the right home in a competitive market. But kind of the average time frame from contract to closing is 30 to 45 days. So the search for the right home, on average, what I've seen is viewing 10 to 11 homes in approximately 10 weeks. I mean, so that's what I've seen out there. Now, I know, right, sometimes people see one home and they buy that home. Now, that doesn't happen that often, but sometimes it does happen. And so obviously it's going to change depending upon your individual experience. Now, what a lot of people do when they start their process, right, is most people these days are starting their process online, right? And then what do they do next? Usually they're starting to go to open houses. And what I hear from people at open houses often is, you know, we're just browsing, we are checking out neighborhoods, right? Those are the things that they say that they're doing once they're in that open house stage. And what I'm going to tell you here is that experienced realtors browse homes and neighborhoods as a job, right? This is what we do every day of the week, is see homes, browse homes, see different neighborhoods. I've been doing this for 10 years, right? So therefore, I have a lot of knowledge and experience about different homes in different neighborhoods. And so even if there's not a home on the market in a particular neighborhood, when someone tells me what they're looking for, then I can say, oh, you might like this neighborhood, right? But if you're just looking on your own, you're not going to know about that neighborhood necessarily, right? Because nothing's on the market there right now. But once an experienced realtor knows what you're looking for, they can identify different neighborhoods that might be a match for what you're looking for, because they know what comes available and what the general prices are in a neighborhood. So that is why working with a realtor is going to cut down that time to search for a home. Also, as realtors, we have access to what's coming on the market before it comes on the market. So I've got, I don't know, 3-4 homes coming on the market in the next couple of months, right? No one else except for my team right now and my clients really know that those homes are coming on the market. Although I may share that information internally with other realtors in my office or other colleagues, or sometimes what we do also as colleagues is we will reach out to each other and say, I have a buyer looking for this. Does anyone have something coming soon? Okay, so that is another way that we are searching for our clients the inventory that's not on the market as well. What's on the market right now, what consumers have access to on those consumer sites, is just the tip of the iceberg. There's a whole, coming soon inventory that we can tap into for our clients as well. And that's how you can reduce the time that it takes from start to finish. So contingencies, if you saw after you get ratified, so here, right, you've got a little sign here that says clear contingencies and deadlines. So those can sometimes go quick and smooth, and sometimes they don't. So again, working with an experienced realtor can make a difference there. In a competitive market, again, oftentimes people are waiving contingencies. Now, what we like to do at Homes by Mason is try to keep your contingencies as much as possible. So for example, a home inspection, if you were in a competitive situation and we're considering waiving a home inspection, what we would do is rather try to do a pre-inspection before making an offer. So that's a way that, again, we can do things quickly and still protect you in the process as well. And another way that an experienced realtor can help the process move quicker is because we have relationships with various vendors. So home inspectors included, pest inspectors, lenders, structural inspectors. These people, when I call them, they respond quickly because they want to maintain the relationship with me. And so I am often able to get one of them to look at a property for a client sooner rather than later and be able to move through those contingencies quicker if need be. So I think that covers my notes on that one. How does the market trend? So this is a 2-year cycle of how the market trends. Again, been doing this for 10 years. This report comes out every month and I look at it every month, and pretty much the market trends the same way. This is looking at Northern Virginia in particular, but again, I've looked at it for larger areas as well. And typically what we see is prices. The purple line here is the price. And typically home sales peak in June. They go down towards the end of the year. We often have a little blip in November. I don't know exactly why. James can probably tell you though too. Oftentimes interest rates drop at the end of the year because there's less demand. And so banks sometimes drop their interest rates, and I think that might partly be related to why we get a little increase, but you can still see it's not going to the peak of what it is in the market. And then they tend to bottom out in January, and then the prices go back up and peak again in June. And then they go down and they go back up. So we're on that upward incline right now. And
On that note,
remember that these are closed sales here. So closings take 30 to 45 days, as I told you. So if the sales are peaking in June, that means that they went under contract in April or May. Okay, so that is that springtime, right? Where most of the buyers are out in the market. There's the most demand for homes in that springtime, April to May. And that is what drives prices up. Price is a result of supply and demand. So therefore, oftentimes at Homes by Mason, we encourage people to consider the end of the year, okay, as a time to buy, because price is lower then, right? Also, what's lower is competition. So as I just said, price is high because demand is high. Now, inventory is also often higher during this time of year because sellers want to try to get the best price. So the pros and cons about buying at the end of the year include the fact that while there is less competition typically, which is nice as a buyer, we don't, again, want our buyers to have to be in super competitive situations because those are uncomfortable and you often have to increase your price and reduce your contingencies. We don't like people to have to do that. So we like you to be able to buy in a time that's less competitive. Also, though, there is a little bit less inventory to choose from. So again, that time, it maybe might take a little bit longer perhaps to find the right home because of less inventory, but then ultimately you might be able to get a better deal on the home towards the end of the year. And you might find more motivated sellers, which also contribute to better deals at the end of the year. So for example, when I'm working with sellers, I often tell my sellers, if you don't have to be on the market at the end of the year, don't be, because that's when the bargain hunters are out. That's when I'm out shopping with my bargain hunter buyer clients. So I tell my sellers to wait until January when prices are going up. So generally, I feel like the sellers who are on the market at the end of the year are there because they need to be rather than want to be. That's not always 100% true, but more likely to be true. So that brings us to what's happening in the market now, right? So what's happening now in the market in Northern Virginia. These are the statistics from April for Northern Virginia. So inventory, new listings are down. We're looking at month-over-month data and year-over-year data. So down 26% from March of this year, down almost 34% from April of last year. Pending contracts, so buyers putting homes under contract, down from the month before and down from the year before. Closed sales, down but not by a whole lot. So down a little bit, 4% from March of this year and down 14% from the year before. Now, that is probably not a surprise to most people, right? Because we are in a worldwide pandemic. What you'll see here may surprise you, okay? So active listings, as we talked about, this is inventory number, okay? So compared to the 5-year average for April, we are at the lowest number ever, okay? So it is a low inventory time right now. Again, because of the pandemic, less people are choosing to list their homes at the moment. However, DOM stands for days on market. So we are at the lowest days on market that I have ever noticed in my 10 years of watching the statistics. And here it does show you, again, the lowest of the 5-year average. 14 days on market is super low. When I sell homes, my average days on market is 21 days, which is great. So, you know, homes going under contract on an average of 14 days basically means people are not waiting. Oftentimes sellers will, and Mary and Gary can relate to this, often sellers will put a home on the market and want to wait through the weekend to have open houses to generate more buyers through the property and hopefully generate more offers after the weekend. So that's kind of often what happens. During the pandemic, I don't think sellers are doing that. I think sellers are putting the home on the market, and if they get what they're asking, or better, then they're taking the offers right away. So that is what I think has been happening since the pandemic started. Here, what you see is sold price to original list price is what OLP stands for. So how close to asking price are people getting? And again, in my 10 years, I don't know that I've seen this top 100%. So the average in April of this year in Northern Virginia, people were getting more than what they were asking for. Okay. So price has not been going down. And again, it's related to supply and demand. So this also shows you more of the same, right? So the median sold price in April in Virginia went up from March and went up from April of the year before. And then that's a 2-year cycle. So again, we see the price still going up in April. So supply and demand, while it went down equivalently. And I'll show you a little bit more of the statistics here. So this is from the entire Bright MLS footprint, which includes 7 states. So it's Virginia, DC, Maryland, Pennsylvania, Delaware, New Jersey, West Virginia. So that's the MLS Bright footprint. And so Pennsylvania had been shut down and completely from doing any real estate, and it did just open up. So that had an impact on the stats that we'll see. But generally, across the entire footprint, volume has and listing inventory has been increasing. New contracts have been increasing and showing, showing volume. Amount of people looking at houses has been increasing. So this chart shows you the overall inventory for the Bright footprint. The orange line is for 2020, the blue line was for 2019. So you can see, while right now we're kind of at the same amount of inventory that we had last year, it's not below what we had last year, or it's just barely below what we had last year. Now, really, we want to see more inventory. Again, in general, our challenge in our market has been low inventory, high demand, driving prices up. And what we see here is the new listing specifically for Virginia. And this is week by week data. So the orange line, again, being 2020 and blue being 2019. So new listings did go down. And now you can see they were kind of on par in these weeks here. And now we're above what we were, okay, in 2019. Under contract. So how many buyers are putting homes under contract week over week? It did go down. And then consistently, it has been going up. And this is, again, specifically for Virginia. The entire footprint shows the same trends as well. Showing activity for Virginia, it went down week over week for the past several weeks. Showing activity has been increasing. And here you can see we actually had more showings in 2020 than we did in 2019 for the first time in many weeks. And then closed listings. So you can see we're still a little bit below what we were the year before. And remember that closed sales take 30 to 45 days to close. So this is a reflection of what was happening a month ago more than what is happening now. So those under contracts that we were seeing, those will be the closed sales in a month, which if the trends continue, we are going to, it seems like our numbers are going to be getting better than what they were last year. So in our local market here, so this is specifically, I ran the numbers for Arlington, Alexandria, Fairfax, and Falls Church. So specifically in that hyper-local area in the past week, the number of new listings, this was really interesting, were down from the week before. So again, inventory was increasing, and then this past week, the inventory went down. However, these two other numbers kept going up. So new contracts went up and closings went up. So this becomes a challenge for buyers, right? You can see demand is still good. And if inventory is still low, then that is a challenge to be a buyer in a market where demand is good and inventory is low. And that is why sometimes when you're shopping for a home, may not be a virtue. I compare buying now somewhat similar to buying at the end of the year, right? So think about what is going to happen after everyone comes off of quarantine, right? There are a lot of people right now, my best friend included, who said to me, I'm going to buy a house after this is done. And what I said to my best friend was, no, please don't. Let's be shopping for a home now. And if you find the right home now, let's get it now before the floodgates open. Because when those floodgates open, we expect to see a highly competitive market again, which is an uncomfortable place to be for a buyer. So as long as, again, we are still in a pandemic, it is not that the virus is not going away anytime soon. So we want to use precautions, and I should have put my slide up here. I don't have it, but at Homes by Mason, we are using precautions whenever we do meet with people in person. We are providing gloves, we are wearing masks, we bring hand sanitizer with us. And realize that shopping for a home these days is actually safer, probably in most cases, than shopping for groceries, right? It is a lot easier to social distance while you are shopping for a home than when you are shopping for your groceries. So as long as you keep yourself safe, shopping for a home right now is not really a bad idea in my opinion. Like I tell people at the end of the year, you have a little less competition as a buyer right now. While there may be less inventory as well, I like my buyers to be in a less competitive situation. And then of course there's the interest rates, right? So interest rates are lower than they've ever been in history. So those really have no place to go but up. So waiting, you risk interest rates growing up. And then our growing metro area, right? Let's not forget that Amazon HQ2 is being built up in our area. So that will continue to also increase demand for housing in our area. And so in general, buying before prices increase is a good idea in my opinion. Real estate, as a reminder, this is a quote from Franklin D. Roosevelt, which I just think is a great quote, so I'll read it. Real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world, especially in our area. Our area is so well insulated in regards to employment. We have one of the lowest employment rates in the country because of the federal government and how much employment is around that, and of course the military. So there's just so many employment opportunities here, and for all of those same reasons, there's a lot of people moving in and out of the area. So there's often demand for real estate in our area. So buying a home, again, in general, demand is going to continue we're going to continue to see it and continue to increase in our area. And so we do expect prices to continue to go up. And then if you buy a home and you want to buy a bigger home later, you might rent out that home that you bought, your starter home. So I actually have 3 rental properties now, and 2 of them are homes that I bought and lived in and then moved into bigger homes. And wealth building through real estate is actually another seminar that I will probably do sometime. I'm still actually learning more about that myself. So that brings me to the end of today's presentation. And the floor is yours. For what questions do we have?
I know I work for you, Kristen, but as a future listing, which we're going to plan to list and buy around the same time, if not at the same time. We live in Alexandria, right outside of Groveton, near Huntley Meadows, and we've lived here for 15 years. We bought in the bubble, but luckily it's been a wonderful place for us, and we've held on to it. And in saying so much, we wish that we had the kind of down payment that we want. but we have about 6 more months to build up our reserves, and then we're going to determine whether we want to buy in Fairfax or in West Springfield, because we are paying Catholic private school education and we'd love to get into a really great school district. In saying so much, I'm a cancer survivor. If I was out there right now, I would be out there, but I would of course play it safe in the COVID. The great thing about people that agents that are listing right now are investing a little bit more in Matterports, which are 3D walkthroughs. Kristen has also been out and done FaceTime or Zoom walkthroughs of some properties for some buyers, as well as Jen. If they're not comfortable to walk into a property, as a person that is a cancer survivor, I have no problem. If I was out there right now, I'd have no problem. As having 5 sisters, whenever they do home improvements, which all of them all over the US, 5 sisters, they're all doing home improvements right now. And we just Zoom and Skype and they show me all their improvements. And it is like being in a home. So there are alternative ways of looking at properties and buying, as well as listing right now Matterport 3Ds dropping from 2nd floor to 3rd floor, going down the garage. It's like being in a home. It's been amazing to see the ability to transition in this market and still do business as usual in an alternative manner. So I just wanted to mention that everybody has a personal opinion as far as whether they want to put themselves out there. But like Kristen said, I'd feel a little bit safer walking into a home, not touching anything and walking through with a mask than going to the grocery store like I did for the first time for my husband last week. It was crazy.
Rebecca, thank you for sharing your personal story and information about that. And I did forget to mention earlier that, yes, we also are willing to do previews and virtual showings for people before they have to step foot in the home themselves. So that is another option for people if people do want to go out and start the search process now. So yeah. I am looking at the chat. I don't see any other questions in the chat.
I've got a question, Kristen.
Awesome. Yep.
I think, shoot, I forgot his name. The gentleman presenting earlier. James was talking about interest rates being at historic lows. I'd be curious what your and/or his take is on where they'll head over the next 6 to 9 months. I recognize that, that's like asking for a weather forecast for the next 6 to 9 months, but you can at least tell us if it's going to be hot or cold, I guess.
Well, the best way, listen, my guess is just as good as anybody else's, but my guess would be it all depends on where the economy goes from here. So if the stock market continues to move back up, you'll see, and, unemployment, if that stuff starts improving, because what's driving the rates down right now is the Fed's purchasing mortgage-backed securities, right? So the Federal Reserve is buying, just like they did after the housing crisis, the housing fall back in like 08 and 09, when they started buying all the mortgage-backed securities. That's what they're doing again right now. So if you see the stock market starting to continue to move upward, and as the economy reopens, and if you see unemployment start to go back down, I think we'll see interest rates start to go up.
Do you think they'll move back quickly, or will it be more of a gentle slope?
It really depends on what the Feds do. So,
Gotcha.
If the Feds pull out of their buying, because right now they just went in and started buying mortgage-backed securities. It was like literally overnight. They announced it on a Sunday, and on Monday they started doing it. So it really depends on what they do, because they're the number one buyer of mortgages in the market right now. So it just depends. If they do a gradual pullback, which I think they'll do, you'll see rates just slowly tick up. But just keep an eye on the stock market and the unemployment numbers. That will definitely be the driver of where the interest rates go.
Gotcha. Thank you.
You're welcome.
Thank you, Ted, for the question. Thank you, James, for addressing that. And again, we wish if we had a crystal ball, we would be making a lot more money than we do. But again, generally, right, what goes down must come up. I mean, I've been saying that for years, and we did see interest rates go up in the past year. And I know when I was working with a client once, interest rates changed 0.5%. And I mean, this was many years ago, but I remember she had picked out a home to see, and overnight rates changed. And that next day I said, I'm sorry, you don't qualify for this house anymore. Overnight. So, just keep that in mind, that, that is the most important number to watch. And if you can catch them when they're low, get them when they're low. Long-term impact of that. So, Gary, I think I answered your question I saw in the chat. Are people putting their houses on the market during COVID? Absolutely. So you saw the numbers, right? Every day, I mean, I'm watching the market every day, right? And every day homes are coming on the market, and every day homes are going under contract, and in increasing numbers in general in our area. So people are doing more and more of it. And even like anecdotally, like just today, the houses that I saw come on when in my email, just more, right? Virginia goes into phase 1 tomorrow. So I think more and more people are feeling more and more comfortable. Now, of course, I anticipate, and the scientists, right, tell us there's probably going to be a second wave. Again, this virus is not going away. So will we be quarantined again? Possibly. However, people are also adjusting to the new norm, right? So people are learning how to operate in this environment. So I do expect the market will continue to move and continue to increase in activity overall. So, any other questions?
I had a question, Kristen. Can you hear me okay?
Yep, I can.
Yes.
Sorry, I should have jumped in earlier when James was talking about the VA loans. I missed what the description of what that means exactly.
I will let James, he just unmuted himself, but I'll tell you real quickly, probably why he skimmed over it is a VA loan doesn't stand for Virginia. It actually stands for Veterans Affairs.
I know, yeah, I understand that.
Okay, so it only applies for people who are veterans. So if you are, though, it's a great product. And then James, go ahead.
Yeah, you can, they had removed the caps. So right now, I mean, they had removed the caps completely. So if you didn't have another VA loan, essentially you could borrow up to $2-3 million without a down payment, but then COVID happened and then they reevaluated that. So right now on a VA loan, if you don't have any eligibility, if you don't have any outstanding VA loans, you can borrow up to $1.5 million is what most companies are offering with a 0% down payment. So it's pretty remarkable. And the interest rates on the VA loans are historically absolutely the lowest I've ever seen. I mean, they're sub 3%. It's insane.
Thank you.
Wow.
You're welcome.
So just as a reminder, I forgot this slide was here. So this says, right, that if anyone wants to, talk about your individual circumstances, as I mentioned before, at Homes by Mason, we are more than happy to schedule an individual private buyer consultation with you, either virtually or in person. Again, we will do it either way. And again, when we do things in person, we are using the appropriate precautions to keep everybody safe. We do have 2 more seminars on the books coming up. So next Thursday at 7 p.m., we will talk about how to buy and sell at the same time. And then the following Thursday, June 11th, we will talk about how to search and secure the right home in a competitive market. So that is it for tonight. Unless there's any last questions, thank you all for joining us. Really appreciate you being here, and contact me or Rebecca with any follow-up needs.
Yeah, if you wanted a recording of this, just go ahead and send me an email at WeDoMore@Homes by Mason. That is my email address, and I'll be happy to supply you the link to our seminars page. You'll also have, of course, the past seminars that we have, which is assessing the value of your home and preparing your home for a successful sale. We have quite a few past events, and they are just as resourceful and informative as the one we've been on now. Although I have to say, this has been amazing. Even for me.
You said that last time.
I'm
You said
sorry.
that last time. It's okay.
But
Thank
it has
you.
nothing to do with performance. It has everything to do with, or the fact that you got through 52 slides within 45 minutes. This one was just jam-packed. And I usually don't bother my husband about this kind of stuff because it stresses him out. But this will not stress him out. After he
Awesome.
watches this, he will be like, oh yeah, we can do this. Oh yeah, we can sell and buy at the same time.
Awesome. Well, thank you, Rebecca. And thank you, James, for joining us. And James will be with us next week as well to talk about financial options for buying and selling at the same time. So we'll talk about some of that. So have a good night.
Thanks so much, Jenny and Ted, for joining us. Have a good weekend.